Welcome to part 2 of this video series. Nikolai here, tapereading concepts. We're looking at COMEX gold on 189 tick chart during the 4th week of June. We did end up so far establishing that there's significant and consistent buying interest in the mid-70s during the first half of the week throughout the Wednesday session, and the first opportunity for the week that I closed was this long opportunity where unfortunately I opted for a conservative exit, a safe exit in the mid-80s and a potential slowdown balance point in the middle of the range within which we've been rotating so far. We ended up the session with a steep sell-off here. We did get stretched all the way down to the base in the mid-70s. You can see the parabolic collapse here that we had. Nevertheless, the base did hold within the end of the session, and we did close safely here towards 1780 in the beginning of the post-market or the Thursday session. We did get some indecision back and forth here. Notice that price is oscillating on both sides of our sloped reference point that was defining the latter stage of this bullish rotation, which is indicative of the potential that we are going to follow through yet lower, since we're coming from above this reference point. Here in the first few hours of the Thursday session, there was initially a bullish press after a higher low towards 1780, but the sellers did step to push it back to the downside towards the 74 mark. And even though initially buyers did show up here, we did get a lower high, and eventually the pressure here resulted in an attempt on the base here between 73 and 74. Just a handful of ticks lower than the reference point is what we saw in terms of price. No follow through once the door got opened, and promptly a reversal and a move back here into the upper 70s. This event here has very bullish implications, and it's also a bit of a surprise, having in mind that we made new highs, we didn't get follow through, and then we slammed here at the base with so much strength. So I would have expected that when we open this door, significant number of buyers will cover, and since that never happened, there are two ramifications as a conclusion. The first one is that, well, these buyers are indeed resilient and still present here in the low 70s. The second one, however, is that while we could rotate all the way back to 1790 or even to the mid-90s here where the last high was, if that doesn't happen, the next arrival of this base is almost certainly going to take out the buyers at this level, since a lower high on the larger scale would probably saw a lot of doubt. We already saw that these buyers are not entirely invincible, even though they stepped in to defend this level so far here early on Thursday. This is already closer to the European session. I'm not in front of the screen, and you can see that the buyers did not only recover above 75 and eventually 76, but also the upsloping reference point here is again acting as support. With the mean reverting context that this market has already proven to us, it's a great idea to look for signs of failure on an attempted continuation in one of the two directions, and the opportunity lies in you fading the extremes of this market. In other words, using these here relatively low on the curve shoulders to get positioned for an expected move to the upside. If you do trade in the European session, price was definitely offered here between 75 and 77, where the stop would have been comfortably below most of the positions here established at the base. You would have had success here within the European session all the way into the US pre-market, where the curve steepens as we get here into the upper 80s. What I'm interested in at this point here beyond 7 o'clock in the morning is to see how far price wants to go. I'm in the middle of this well-established range here in the mid 80s. However, I'm seeing that as the price is getting steeper, the potential for overextension exists. There is a pendulum pullback here to the downside. Initially, it's just a regular size, just about 3 to 4 boxes. You can see that the average size pullback on the way up is $300 here. 300 and change here, and just over 300 in this vicinity, but eventually we get a little bit of a deeper pullback. That's not necessarily problematic, especially since we've already seen support establish itself at least twice on a higher low. However, it is a potential sign of profit taking, and of course, if it's a one-time broadening here and if there's new highs to be had, then we're actually going to see a solid base or a strong drive to the upside. My downward sloping reference point here is what I'll be looking at. And if we follow the tape here right before 9 o'clock, you will see that we already had a potential shoulder here. You can see that there was a double top forming just under 88 with the sharp reaction here following through twice, each one of these making slightly lower lows. Price did stabilize here just above 83, and then you can see where the buyer stepped up here to look for the next leg to the upside. We did rally to the reference point and then eventually pushed on the reference point. You can see that the sellers were defending this level. There was no separation in this attempt here at the test of the line, no separation here either beyond the line, and there was even another one here. So the step to the downside seems to be just about 100, maybe up to $150 lower here between the initial hypothetical shoulder and this weak reaction on the way up. We did get a bit of a move down. The buyers again propping here between 83 and 84, so the bid is also creeping higher, and in this area of interest here, roughly between 84 and 86, 87, we're really gonna see who is in control. This is, if we orient ourselves here on the larger scale, this is still a lower high to the one we have seen so far midweek, but no significant lows are taken out, so we're yet to make any conclusions. What caught my eye here is that despite the strong rally here, which initially took out the top, price slammed to the downside just as strongly, immediately retesting this bottom. This is the same price action that we saw right here and previously right here, so definitely a bearish implication, and since there's already a precedent and there's a repetition, I do prefer to get positioned with the now emerging bearish bias promptly after the trigger event. I did pick up the position down here in front of this edge below 85. It's relatively aggressive placement once again, but my preference is usually to trade promptly after the trigger event, even if that means that the positioning is not ideal. A better positioning would have been down this reference point, which also happens to be about the middle of this sharp reaction to the downside. That price was offered here on a quick blip, but we could have easily seen the follow through here from the cluster as well. I was happy with this positioning. The staple $300 per contract risk was sitting just close to this shoulder. It's not ideal, but I could in a pinch always bump the risk by about 5-6 ticks to be just a few above this hypothetical shoulder, which would have been ideal. Nevertheless, on a $300 stop, I never really took any significant heat here, and we promptly saw new lows. At this point, it seems that I'm getting some confirmation. No significant support at this upsloper. In effect, the oscillation around this reference point with a pull into higher prices suggests that there's probably going to be a lot of selling that's going to happen here. Again, the lower high on the larger scale has very bearish implications. If we collapse down to the base, I would have expected that this base will break here. That never happened. but if we get a second push, it's almost certain that a certain contingent of these well-entrenched buyers will pitch their positions, and in the ideal bearish case scenario, we're gonna have the entire range collapse to the downside, in effect doubling this box below the support here, below the base. That has massive reward versus risk implications. However, the first problem area would be indeed the bottom around 73, 74. What followed here on the intraday scale after 9:30, after the opening bell, I pretty much got positioned about 5 minutes after the opening bell with the emergent bearish sentiment out of this area of interest. We did rally back to our downsloping reference point. We did manage to close a few times above, which is somewhat disconcerting. Nevertheless, the sellers did show up like clockwork, just about 100 ticks lower, so the step here on the way down is regular. There was a secondary attempt here. You can see that we're getting a cluster here of participation, which suggests that there is supply for the demand at these prices. And then there was a third drive here, which very similar to the previous one, poked above the door and got slammed to the downside, suggesting that, well, a new low is coming. It didn't take long, and you can see the price accelerates as it breaks the low. As we could have anticipated, that there will not be any significant support here between 1780 and the low to mid 70s. We did get an excursion down to just about 76, another pullback here, double the size of the one that we were getting roughly on the way up. You can see here just about 350 here, similar, and this one bottom to top here, well, almost 6.5 is 6.5 points in this case, each one 10 ticks, so just short of 70 ticks or $700 per contract. It's normal and healthy in a downtrend to get pullbacks as long as we see lower highs and lower lows. You can see that even though the volatility again slows down beyond 11 o'clock, there was consistency in this orderly selling. We did arrive down here below 75 and then had a bit of a reaction. This was already deep into the afternoon session, and I opted to close the position again safely, conservatively, right into that target zone on the third arrival at this downsloping reference point. This was the backside of the compression that we had earlier in the session. Yes, there are still bearish implications, but most of the time I opt to not carry over the intraday position beyond the closing bell, and in this case that was my choice again as well. In part 3 of this video series, we're gonna follow the price action within the last trading session of the week on Friday. Beyond this point here is where the Friday session is. Again, this is Day Trading Concepts. My name is Nikolai. If you like these perspectives, like, share, subscribe to the channel. I appreciate the support, and I will catch you in the next third part of this video series.